Hello, clients, friends. Andy Tuttle here with the Tuttle Group. Hope you're doing well. Again, I know you're working. It's the summer. School's going to start in a month. There's a frantic pace about getting contracts in and moving. We know it. We're feeling it, and I know you are too. So I wanted to give you some encouragement on a couple of fronts today. One, on rates. We're going to look at the charts and kind of what's brought that about. And two, we're going to look at not only the mortgage bond charts, but a few other charts about that should be encouraging if you're out there looking to buy. I know a lot of you that are buying are also listing your house. So a couple of things, let's get to it. One, this is again the mortgage price chart. If this is your first time getting this. The higher the price, the lower the rates, the lower the price, the higher the rates. And so what we've seen since really the beginning of July is that prices have been falling. There's been a lot of pressure on the bond market. A correction happened. We went to a sideways trading range. We saw rates tick up about 0.25% to 0.3%. And just in the last few trading days, we have seen an enormous improvement in the bonds. This is a strong bond market rally. So this is very good for you. And let me kind of show you just a little bit of insight into what that means. So here's our new support line way down here. Our resistance line is now just slightly above this. We are just right hitting up against it and come back down. So if we can close above this today, we may see coming into next week a continued rally. So we've gotten back most of all of our gains. A lot of that happened, just so you know, because of the GDP growth for the first quarter was revised to just 0.8. The second quarter, 1.2, and fall does not look much better. So very anemic growth. In fact, very close to recession levels. Wouldn't take much for us to see zero growth. And if you'll remember, recessions, you only know that you're in one after you're out, and it's 2 consecutive quarters of zero GDP or negative GDP growth. So we're really close to anemic levels. That's given a bond market rally. Here's some other charts I want to show you to not scare you, but actually encourage you. We got to know something else too, that one of the strong factors is workers are holding on to their qualified workers. So the jobs report and the jobless claims are down there in good levels. So it means if you're a qualified worker out there, you're getting paid a little bit more, they're hanging on to you, they want to take care of you, and that's who you guys are. So you are helping the bond market. I've seen your raises, right? We've seen some of this stuff. So you're doing well. For those of you that are working hard, which you are, they're taking care of you. That's what this charts are showing. Here's a couple other charts that I think are important. This is for you to see. Okay, look, 2010, this is the number of days from list to sell. It's gone from 150. Now you'll see this is cyclical. This is summer, winter, summer, winter, summer, winter. But you'll see cyclically, look at where we're at right now. It's gone from 150 days, and I'm sorry, this is winter, summer, winter, summer. 150 days down to 78 days average from the time you say, I'm going to list my house, to the time not only you get a contract, but also closing and funding. So it is super fast, that the number of days on market now, super fast that you're getting from list to close. Here's another one. The inventory has gone down from $2.4 million in 2012, or 2.4 million homes, to 1.4, 1.5 million. So we've got a lot less inventory. We have them going, well, as soon as they're getting on, they're going off the market, right? And in addition, we're having a ton of millennial buyers come on the market. One of the biggest reasons is because we've seen a spike in rent from about $1,300 to about $1,400 in just over a year. So that's a major increase. It may not seem like a lot, but that's a major increase. It's getting millennials making up now 33% of the market of people buying homes right now, which is huge. And it's putting, again, it's pushing prices up. So the reason I tell you that is because some people say, well, my gosh, is this a bubble? What's happening? No, no, no. This is not a bubble, guys. This is pent up demand, and it's just simple supply and demand. When you have more pressure on, when you have a lot of demand for the market and things are moving fast, it's going to put pressure up on prices, which is a good thing. Additionally, when you see rates this low and continue to go down and rents going up, it helps people have more buying power. So right now, if it's been a while since you've been pre-approved, and you were pre-approved a few months ago, and I know a lot of you are, this is a great time to relook at those rates. Call us and say, hey, where are they at today? I'd like to see, the difference here. You may be able to find yourself being able to qualify for a little bit more home right now if you're making offers. So this is a really good time to be in the market. You guys get out there and know that this is a great time, and don't be concerned that prices are going up. Know that that's going to make you some money going up, and you got to remember that the average wage versus home price is a 5-to-1 differential. So in other words, if you pay $1,000 for a home, you're typically making about $5,000 in income. So if we do see appreciation keep going 5 to 10%, well, you only need to get a 1% raise to see that be a net neutral for you. So I hope that's helpful information. I want you to be excited about the market, be excited about where rates and prices are going, and get in the game and make those offers and get them. If you need us, you know we're here. Your realtors are amazing. We know that because they referred you to us, or we referred you to them. So you're working with some of the top realtors around. So get out there, stay with the good fight. It's going to be worth it for you. Go make some money. Call us if you need us. Have a great week, and we'll talk to you soon. Take care.